Hamilton home sales just dropped to their lowest level in 15 years. Prices are sliding, listings are sitting, and even after multiple interest rate cuts, buyers are not rushing in. So, what's keeping the market frozen? And what does this mean for your home's value moving into the winter? That's exactly what we discuss in this month's Hamilton housing market for November 2025. My name is Morgan Little. I'm a realtor here with the Golfi team. If I can ever be of any help, feel free to reach out. There's a link below to do so. Now, let's get into it. You've probably noticed for sale signs hanging around a little bit longer lately, and it's not your imagination. In October, the Hamilton housing market slowed down again. And while prices continue to ease, most sellers are finally realizing this is not the quick, crazy market that we had a couple years ago. And then there's many that aren't realizing it and are still holding on to it. I'm working with a few of them myself. But the thing is, if you're going to list and you actually want to sell your home, you have to price strategically. We'll talk more about this as we go through the numbers. October was another quiet month for Hamilton real estate. According to the latest data from the Realtors Association of Hamilton and Burlington, there were 463 sales in the month of October. That's down 17% year over year, reflecting slower transaction volumes across all property types. Continuation of what we've seen over the previous months. There were 1,170 new listings that came onto the market. That's actually down just 3% compared to the same time last year in October, showing relative stability in terms of inventory for sure. Lots of options for buyers. But that's added to the 2,461 active listings in the city of Hamilton, which is up 13% year over year. Like I said, providing buyers with significantly more choice. This has given us 5.3 months of supply. Months of supply is a number that we use to show what kind of market we're actually in. Buyer's market versus seller market versus balanced market. And technically, 6 months and over would be considered a buyer's market, but we're definitely in a buyer's market at this point. That's up 37% from last year, firmly establishing us in that buyer's market that I mentioned. Homes are sitting longer as well. Conditions continue as listings stay active longer across Hamilton to 39 days on market, which is up 8% year over year. So what that is that's the amount of days that it's taking for homes that do sell to sell. So I have a seller that I'm working with now, and they've been calling me almost daily to say, what's happening, what's the interest on the property. And yes, they have another offer on a property conditional on the sale of their property. So I understand the urgency, but the thing is, homes that do sell, they're selling on an average of 40 days. So it's not expected to sell in that first week necessarily, unless we're priced, very attractively. So that is something to just keep in mind if you are selling. Expectations in terms of the length of time that it's going to take you to sell. So why sales are slower? Well, there's several interconnected factors that are contributing to the slowdown in the housing market. And trying to understand these dynamics can really help explain the conditions and help temper those expectations that I mentioned. So interest rates, despite recent cuts, they're remain elevated compared to the pandemic lows, and that's like a anchor point for a lot of people, right? The prices and the rates. A lot of people still use that in their head as what things should be in an ideal world. That was a rare occurrence, and never going to see that again probably, but this has definitely impacted affordability. So yes, prices are down from the peak, right? Like we've come down 20-30%, but rates are up. So your monthly payment from that time may not be that different. And for those people who did buy during that time with the higher price, but with the lower rate, and are now readjusting to a mortgage rate that they'd be up for renewal for, that's going to be quite a noticeable difference. So yes, prices are down, but it doesn't always mean that your monthly payments are down all that much. And we talk about prices that continue to slide, and that's happening, but not at like a drastic rate that a lot of people may have expected. So that's continued the cautious buyer sentiment here. Economic uncertainty and the job market, tariffs, all that stuff have made buyers deliberate more in their decisions. Many are taking extra time to ensure they're making the right move at the right price. And it comes down to fight, flight, and freeze, right? A lot of people are maybe freezing and just being like, okay, I don't know what to do, so I'm not going to do anything. But we do have this increased inventory. So honestly, it's a good time if you're a buyer. We're listen, I'm not going to be one of those realtors that says that's the best time to buy. You should be buying right now. But honestly, from now, and I'm not saying we're coming out of this anytime soon, but over the next year, we may see things kind of flatten out and then potentially pick up again in, end of 2026, 2027, just based on pure available homes, affordable homes. Like the prices are only going to go down so much. And so I think it is a good time for you if you're a buyer who's in a position to buy. That being said, prices have softened but not collapsed, like I mentioned. The prices have adjusted to the new market realities, but the changes represent just a gradual correction rather than a dramatic crash. This quote unquote soft landing has maintained some sort of stability while improving affordability for buyers. The average price in Hamilton, 781,000. Again, like I always preface that with that includes, Ancaster, Dundas, Hamilton Mountain, all the surrounding areas, Stony Creek. So that, kind of influences that average price up a little bit where some of those areas have higher price points. It is down 4.5% from this time last year. So we've seen that continued decline in the average price. But if you look at the benchmark price, which represents the home with the most common set of features, that's sitting at 700,000. So, that sounds a little more manageable than the 781,000. That's also down 8% year over year. And so, like I said, you can get homes in East Hamilton for, 5 to 600,000 now. They used to be 600 to 650. Now they're in the 500s. So you can definitely get those homes. And then Hamilton Mountain, as always, one of the hottest markets in the city. But also, it's pretty incredible the deals that you can get there now, quote unquote deals. I know it may not feel like a deal, but compared to what we've seen over the last number of years, you can get a good house. Like I purchased my property in 2024, right? Yeah. And so I wish I had waited a year. In the long run, again, it doesn't matter. And that's one thing to remember as well. I probably could have got a bit of like a little more bang for my buck. But in the long run, it's not going to make a difference. So let's look at the different property types and what's happening there. Detached homes. Again, remember what I said about the more expensive areas bringing that average up, but your detached average price is 856,000. That's down 7%. Single family homes continue to see steady demand from families, though price sensitivity has increased as buyers weigh space need against affordability. These numbers are still much more attractive than Toronto, which is, I moved here from Toronto. I help a lot of people move here from Toronto. So you still, there's that segment of the market that is still willing to buy at these discounted rates because they are quite discounted compared to Toronto. Semi-detached, you're looking at an average price of 700,000, down 6%. Townhomes, 660,000 average price, down only 2%. So those aren't dropping dramatically there, but 660,000 for the average price across the whole market again, right? And condos, which have taken a big hit like everywhere, average price of 466, down 14%. So you can see that they've taken the biggest hit by far. Neighborhood highlights. Dundas, 23% increase. It's the most balanced market with just 3 months of supply. Continues to attract buyers seeking that small town charm and urban proximity. Dundas is a beautiful area. Obviously, a higher price point, so it may not be for everybody, but fantastic area. And obviously, people are still flocking there that are looking for that kind of lifestyle. Great place, love it there. Hamilton Mountain, average of 686. That's down 9% year over year. Again, not one of the hottest markets. Always still active on the mountain, but you can really get a nice home there for a decent price these days. You have Ancaster and Flamborough with an average price of 1.1 million. Sales are down there 25 to 30% year over year. So those premium neighborhoods, they're facing headwinds as luxury buyers are becoming more selective. But like I said, Dundas is still attractive there. So there's no hard and fast rules with any of it really. Every neighborhood and every, area has its own little submarket and their own little activity happening within it. So it really depends on what you want to do, what your goals are, where you want to be. And working with a realtor who understands those aspects is really important. So just keep that in mind. Again, if I can be of any help in the future, we have the biggest team in the area in Canada, number one Remax team. So always happy to help. And you may have heard that we've had multiple interest rate cuts, right? And why aren't those having a major impact on the prices or the activity in the market? We just had a recent 0.25 basis point cut, one of multiple this year, second in a row after a couple pauses. But it hasn't changed. It hasn't changed buyer confidence. It's still low. There's the economic uncertainty, the tariffs, jobs, looming recession, maybe we're in it already. All that stuff has had an impact on that. And those small rate cuts, like they make good headlines, but they do only affect variable rates, right? Versus fixed. And most people are probably going to get a fixed. And for those variable rate mortgage holders, you're going to save, $15 per 100,000 a month. So if you have a $500,000 house, you're going to save $15 per $100,000 worth of home. So not a massive impact, but over the number of cuts that we've had over the year, it can make a difference for sure. But obviously not enough to get people to just dive right back in. So, a recent announcement by Hamilton is the $2 billion that they are investing in construction, creating long term value within the city. Despite the short term market adjustments, Hamilton's long term trajectory is remaining strong, and the city wants people to know that. They made this announcement with record setting construction investments, demonstrating confidence in the city's future growth. They have infrastructure projects like the LRT, which is actually, under their shovels in the ground for that. They're looking at revitalizing the downtown core. I was just at the First Ontario Concert Hall last night for a comedy show, and I know they're putting a ton of money into that place as well. And then they're looking at significant residential and commercial development, reshaping Hamilton's urban landscape. This is going to hopefully, create jobs and, quality of life and attract more people to the city. So there's a lot going on here. I came here for a reason. I have faith in the city and what's happening here. And there's a lot of headlines out there about the city. I'm sorry, I'm going on a bit of a tangent in certain areas that you want to avoid. And that's just very similar in so many downtown cores and places. You don't have to make that part of your lifestyle here. There are beautiful areas around here where that doesn't have to be your day to day by any means. So, just a little 2 cents there for you. What does this mean for you? Well, as a buyer, again, you continue to have lots of choice, 2,500 active listings and rising, so don't feel rushed. Put in offers, have conditions, take your time, but, take some action, make a buy because you have that possibility now. And then for sellers, I've said it, I keep saying it. I have sellers who are not listening, but you got to price strategically. You just got to price right. You got to be realistic or don't sell. Don't list. If you have to sell, then you got to come to grips with what is really happening here. The longer you sit on the market, the worse it becomes. So just got to keep that in mind. If you're ready to talk, even if it's just to pick my brain and kind of help plan out your next moves, feel free to reach out, book a call below, and I'm happy to have a chat. Until then, I'll see you on the next one.